Hey there, chart friends. Lamont here from JKS, checking in on the solar sector and NEE, which I feel like maybe we can stop soon. All right, so for our ETF10, our sector ETF10, this 102.50 line, by the way, it's just this close over here. It's the highest close of this monthly consolidation structure. So I like that, the current price action is staying above it. Even though we're very extended on the monthly time frame, there's really no sign of any really strong, consistent bears yet. Any selling even on the weekly time frame has just ended up in like massive moves up. So for now, no bears in sight. So let's see. We had an inside bar today, closed near the high of the day, pretty strong. We'll check the hourly trend. So we have a bit of an EQ. 1, 2, 3, close enough, I guess. Call it 4 tops up here, and now we're just tightening up, going sideways. So the question is, we're gonna fade down and look for a daily higher low, like what happened over here, or are we gonna break bullish? And just by looking at these two structures, comparing them, this one looks better, right? First of all, we just put in another daily higher low over here, so we've already got some selling out of the way, right? Buyers showed up right on the median line. We put in this higher low at 97.64 by changing the hourly trend way back here. And now we are in this tightening hourly EQ. I wouldn't be surprised if we continue to go sideways and maybe made this a bit more even. But we could very easily just bull break out of here too. So the range is a little bit tight. I don't know if I really love playing anything besides like bottom fishing these levels here. So if the 5-minute could get extended down here, looking for like an hourly pivot, I think that's a reasonable trade. And just stopping out if the EQ breaks bearish, right? So give it a bit of wiggle room. Maybe consider this more like a zone, a bottom fishing play off of a zone. But yeah, something like that, just anticipating for this EQ to tighten up and then ideally break to the upside. And I would definitely take some profit off, before this high, somewhere over here or so. And then just, leave a runner on in case the bulls show up and then we see more upside. The market, in my opinion, looks fine. We had SPY just, yeah, we had this big liquidity break day, but both showed up all day. So I mean, I don't know. Bear's not really proving it. That being said, there is some potential for divergence to set up. If we break to a higher high and then the RSI does not get over 82 or so, then we'll have some daily divergence to be mindful of. But as of right now, everything's still very healthy. But if the bears are able to show up and defend this high of 106.66 and break below 103.72, then we will be looking for that daily higher low with anything over 97.64 being one. That wouldn't be terribly surprising, honestly. Even a pullback for a weekly higher low would be fine, in my opinion. Okay, so JKS, an inside bar today as well. Definitely not what bulls want to see. I'm still interested in my, whatever. It's at least stalling to the downside and getting this inside bar, and I think I would be fine with taking another trade down here. I only got one fill, and I chopped, I believe on this day was the chop day, or yes, it was this day. And now we're just going sideways. So now that the RSI has cooled off, I don't really want those two fills lower in the original. I think I should. Yeah, I only got that one fill, and then I chopped it up. So it was this day, and then I chopped it up, and now I'm just hanging out with it. I don't really love two more fills down here, I don't think, because I want to make sure the hourly would be extended. Yeah, so, and that's why I like chopping up for profit, right? It gives me flexibility. First of all, I already enter every trade with much lower risk than I need to take. I think typically I don't want to lose more than 2% on a trade, and I almost always set them up for 1%, knowing that if things kind of get a little dicey and I want to get, mess around with the original plan a bit, that I have the risk cushion to do so. So now, because I only have this one fill here, I didn't get that second fill, and I chopped it up on this day, my cost average is really like over here somewhere. So the new trade would look something like this. If I were to take the same size as what I have now, which I probably won't. I'll probably like take a bigger size here and here, if anything, because it's a large range. So I think I'll probably pyramid it. All right. So anyway, still looking for a daily higher low technically over 5163, and we are just looking out for, that's going to be too much range for me. I'll probably just take one scale. Yeah. I'll do the math and see if I can swing it. Maybe I just do even scales of of the half that I have now. That's probably the best, easiest for management. I'm very lazy, so like I don't like to manage my trades too much. So that's why I like to de-risk, so that they're very low stress and they're easy to manage. Anyway, but of course, if you're running a smaller account, you have to be aggressive, then so be it. But this is just how I like to do things. Yeah. So anyway, if we were to get down here, my point is I would have no problem bottom fishing these levels in hourly oversold conditions. So if you're not in a position at all and you want to try to be patient, I think that would be even better. So if you have no trade on whatsoever and you just want to start now, maybe something like that would be better for you. Still looking for that daily higher low, really, or potentially a bear break with minimal fall through. There you go, something like that. Yeah, so just watching this channel structure still. Really, I care more about this support line than I do about the resistance line, because there's just not a lot of hits on it yet. So zooming into the hourly time frame, and we just have an hourly EQ. Not exactly the kind of wedge break you want to see. But that being said, it's really just about this EQ, okay? So if we break bullish out of this EQ, that daily higher low will likely be set, and we'll be looking for that daily lower high with anything under 85.32 being one. But however, if we break bearish, especially if we lose this 61.12 level, then essentially that'll be a daily trend change, really. But as long as we're in this channel, I still like this play down here. Sunrun. All right, so not really getting into any of the channel extremes, which is really the only place that I would make a play at this point. I don't really care if I miss any trades in here. But that being said, if you were interested, if we were to pull back here for a daily higher low, definitely that's on the table. So let's see, actually, maybe, yeah, maybe start looking for this a little bit earlier, like that. And you'll probably want to give a bit more wiggle room. There's also the potential for, yeah, I don't know, actually, this sideways, man. I would rather make a play for like that daily higher low at this point. So let's see, that daily higher low is there, and the something like that. Okay, would be pretty deep for a higher low. Let's see what that would look. This would largely be dependent on the RSI. RSI is going to come up to meet price. It's very far away from the bottom line right now, so it may be hourly oversold here, and if it is, then I don't hate that, right? But basically, we're either looking for this daily higher low over 63.52, or we're looking for a top fish off of the all-time high resistance. That's it. All right, so FSLR, getting in that zone of interest. I guess I didn't draw a long box, but I believe it's the RR is appropriate to get to a potential lower high. Let's take a look. Or to the median line. I don't know, it's a little lower high. Yeah, the R is fine for this. So let's just make sure that the hourly was getting oversold. I mean, we're technically it's a daily downtrend now, so you know we're not looking for a higher low, but very often these daily pivots will occur in hourly oversold conditions. And knowing that there's all this congestion here, I kind of doubt that it just breaks down below this 84.77 level. I would actually probably use this last. This is the lowest close before it ripped up. So I like that conceptually. I use it all the time. It's a I don't know, it's just something I like. So I would probably just adjust it like that. Right. So that same fill, I think I would be fine with that. I don't obviously you wouldn't love it with this close. You would have got that fill here and some bounce. But I don't know. I don't know. 2%. I probably wouldn't have chopped it up there. So probably just be in this one fill. I still like it. It's just flirting with oversold conditions now. So if we were to get this deep into all this congestion and the channel being there, I like it. Okay, so but it is a daily trend change, and so we could be looking at weekly consolidation now, which we are, and we are looking for a weekly higher low though over that same exact level. So I don't hate this play. I like this. I will say though that it's starting to look a little wedgy, eh? So something to be mindful of. And so it's pretty much at this wedge support now, and it's at the place where you would anticipate the break, right? You don't want it to get super deep into the wedge apex. Typically breaks around 60%. But then another consideration is that rising wedges break down less frequently than falling wedges break out. So, it's probabilities, right? Either way, if we get that extension into this channel, I still like this trade. Just this wedge is just something to keep in the back of your mind, right? Like let's say this trade goes sideways, it rips through all three of these levels, and you get stopped out. A lot of the time, people will try to make that play again. But if you have this rising wedge in the back of your mind, then that might be a check, right? For you know what? I just remember there's that macro pattern that could be potentially playing out now. Maybe I'll pump the brakes on a second attempt here, right? Context is very, very important for all of your trades. All right, for all trades, I should say. And NEE is freaking hilarious. This thing is hilarious. All right, so really we're just watching this daily sideways range. All right, maybe it's easier to see without the drawing. So we're watching this sideways structure, this rectangle, and then this one as well. While we're not getting anywhere, we are maintaining over this long-term consolidation. So what that looks like on the weekly is just healthy stair steps, technically. And we are looking for the potential for a weekly higher low to be set. We're still grinding the 80 MA. I mean, it's not doing anything, but it's also not just not doing anything. So while it's not doing anything, the best thing to do typically is to just continue playing the range that we're in. Now, it's not a wide range, right? It's not a wide range. So if anything, if you're bullish NEE, then you just be bottom fishing these levels, building a position. And if you're bearish, just be top fishing these levels, building a position. That's it. That's all I really care about. I'm about to stop covering this. It was a member request way back when. And I don't even remember who. So we'll see. Maybe NEE is gonna get the boot. Win, and maybe I'll try to find another win name. And the fans volume is no good. Very low volume traded, so that's why damn it. I mean, darn it. Keeping it PG. Why is PTOA? Alright, well, this video is over. Thanks for tuning in, and I will see you all soon.